Welcome to After the Bell, the Capitalists versus Consumers Daily Market Report. Here is everything that moved the market today, Monday, May 11th, 2026. After 6 consecutive winning weeks, the market came into today facing a setback on the Iran deal front. But chip stocks had other ideas. We have a lot to cover. This video is for educational purposes only and not financial advice. Please hit the like button and subscribe so you never miss a daily report. Let's get into it. The numbers at the close. Despite a challenging backdrop today, the market posted modest gains and set new records. The S&P 500 rose approximately 0.2%, closing at a new all-time high. The Nasdaq climbed approximately 0.1%, also posting a fresh record close. The Dow Jones Industrial Average advanced approximately 0.2%, closing just under 49,700. The Russell 2000 Small Cap Index was the standout performer, gaining 0.76%. Here is what makes today's session remarkable. A rally in chip makers left the S&P 500 at all-time highs, even though most of the index's individual stocks actually fell today. This is the market concentration story in its clearest form. A handful of massive technology companies doing enough heavy lifting to pull the entire index higher, while the majority of stocks decline. Over 55% of US issues declined today, while only about 42% advanced. And yet the indexes hit records. That is the power and the risk of a market this concentrated in a small number of names. The Iran deal falls apart. For now, the dominant story today was the collapse of the latest Iran deal negotiations, at least temporarily. Over the weekend, Iran submitted a new proposal to US negotiators. The proposal called for ending the war on all fronts and lifting sanctions on Tehran. President Trump's response on Truth Social was blunt. He called Iran's proposal totally unacceptable and said the ceasefire is on life support. U.S. crude oil rose to around $98 per barrel, with the near halt of traffic through the Strait of Hormuz reigniting worries about energy disruptions that would fuel inflation. The Treasury market, which has priced out the odds of Federal Reserve rate cuts this year amid the conflict, saw an increase in yields. Gas now averages $4.50 per gallon nationally, heading into key inflation reports this week. That is the highest level since the conflict began, and it is a direct tax on every American household, regardless of income level. Here is the key insight. The market has now been dealing with elevated oil prices for months. It has largely learned to compartmentalize the Iran situation, staying focused on earnings and AI momentum while treating the geopolitical situation as a persistent background risk rather than an immediate crisis. Today's session showed that compartmentalization clearly. Oil spiked, the deal appeared to collapse, and the market still hit record highs. Whether that confidence is warranted or represents complacency is the central debate on Wall Street right now. We will come back to that. Chip stocks lead the market again. For what feels like the 100th trading day in a row, semiconductor stocks were the primary engine of market gains. Chip leaders, including Nvidia and Intel, extended their AI-driven rally. Qualcomm surged on an analyst upgrade, and Micron technology continued to rise. Demand for AI memory has analysts talking about a sector supercycle. Micron specifically deserves attention. The company's stock has been on an extraordinary run, driven by the fact that its high-bandwidth memory chips, the type used in AI accelerators, are sold out through all of 2026. When a critical component of the AI build-out is completely sold out for an entire year, that is not a sign of slowing demand. That is a sign of demand so strong that supply cannot keep up. JPMorgan Private Bank released its 2026 mid-year outlook today, stating that the AI supercycle may just be getting started. The firm said the prevailing narrative around the AI supercycle has become too pessimistic and laid out 3 specific investment recommendations. Invest in the data center build-out, semiconductor supply chain, and power generation and transmission assets. JPMorgan called these some of the most fundamentally attractive stocks in the market right now. Yardeni Research President Ed Yardeni also raised his year-end S&P 500 target to 8,250 from 7,700 representing 11.5% upside from Friday's close. He told CNBC, "I have been bullish, but not bullish enough. The earnings estimates of analysts have been phenomenal. I have never seen anything like it." Today's winners. Lumentum rose 7.7% after Nasdaq Global Select Markets said the optical and photonic products maker will join the Nasdaq 100 later this month. Index inclusion is always a positive catalyst because index funds are required to buy the stock when it joins, creating automatic demand. Moderna jumped in early trading as investors look to its early hantavirus research. The stock has gained more than 15% in the past 5 days. Hantavirus has been emerging in news reports, and any company with relevant research gets attention from healthcare investors quickly. Circle Internet Group soared on continued optimism about stablecoin legislation, building on last week's surge. The regulatory clarity story for crypto is developing rapidly, and Circle is one of the primary beneficiaries. Today's losers. The trade desk fell 9% after missing Wall Street earnings expectations and issuing weaker than expected second quarter guidance. The programmatic advertising platform has been one of the AI application success stories, but guidance disappointments are being punished severely this earnings season, regardless of the broader market's strength. Dollar General slipped 5.8% after offering soft fiscal 2026 guidance amid investor uncertainty following a leadership transition announcement. Dollar General is one of the clearest indicators of lower-income consumer health, and its weakness today, combined with recent data showing lower-income households cutting gasoline consumption by 7% during oil price spikes, reinforces the K-shaped economy narrative. The upper half of the income distribution is fine. The lower half is under real pressure. Nintendo shares fell after the company announced it would raise Switch 2 prices, the Japan model going up by 10,000 yen with US price increases coming later this year. The gaming industry is facing the same cost pressure as everyone else. The concentration risk conversation. Today's session brings up a topic that more analysts are discussing: market concentration risk. Only 52% of S&P 500 stocks are trading above their 50-day moving averages as of Friday. 3 companies alone, Amazon, Alphabet, and Meta, explain approximately 70% in dollar terms of the increased earnings expectation for the entire S&P 500 for the full year. What this means is that the index's record high performance is being driven by a very small number of extraordinarily large companies. Most stocks are not participating equally. If those few companies stumble, as Meta and Microsoft did briefly last week despite strong earnings, the entire index feels it disproportionately. Sam Stovall of CFRA Research noted Monday that the S&P 500 Relative Strength Index closed in overbought territory, alongside overbought readings for the communication services and information technology sectors, as well as the Nasdaq 100. He said the market may need to take some time to catch its breath before continuing its bull market run. This is not a prediction of a crash. It is a healthy observation that markets that run this far this fast often pause and consolidate before continuing higher. A 5 to 10% pullback at some point would be normal and healthy, and would represent a buying opportunity for long-term investors. Trump heads to China. This week also includes President Trump's trip to China to talk with President Xi, where technology and rare earths could be among the topics. This is a significant development that has not gotten enough attention in the market today given the Iran headlines. US-China relations directly affect the technology sector, particularly semiconductors. China controls a significant portion of the world's rare earth minerals that are essential for chip manufacturing and other technology products. Any progress or tension in those talks will move markets. Watch for any announcements coming out of the Trump-Xi meeting later this week. This could be a significant catalyst in either direction for technology stocks. What to watch this week. Tuesday brings key inflation data, the Consumer Price Index for April. With gas now averaging $4.50 per gallon, heading into the report, inflation is likely to remain elevated. The question is whether the core inflation number, which excludes food and energy, shows any signs of improvement. The Fed is watching this data closely. Wednesday brings Producer Price Index data, the wholesale inflation measure that often leads consumer inflation by a few months. Thursday brings retail sales data, the clearest picture of how consumers are actually spending right now. And looming over all of it is Nvidia's earnings on May 20th, now less than 2 weeks away. Every piece of AI-related data between now and then will either add to or detract from the expectations heading into that report. The bottom line for everyday investors. Today was another day that demonstrated the extraordinary resilience of this market. The Iran deal collapsed, or at least hit a significant setback. Oil rose back toward $100. Gas hit $4.50 nationally, and the S&P 500 still hit a new all-time high. For long-term investors, this resilience is a feature, not a bug. The market's ability to look past short-term geopolitical turbulence and focus on the underlying earnings strength is what has driven stocks higher through every crisis in market history. But the concentration risk is real. The overbought technical readings are real. And the gap between upper and lower income consumer experiences is real and widening. These are not reasons to sell. They are reasons to stay diversified and not assume the current pace of gains is permanent. Stay invested. Stay diversified. Watch the Iran and China developments closely this week. That is your After the Bell report for Monday, May 11th, 2026 here at Capitalists vs. Consumers. Please hit the like button. It helps more people find this content. Subscribe and turn on notifications so you never miss a daily report. Every Friday after the close, we do our full weekly breakdown right here at Capitalists vs. Consumers. We will see you at the closing bell tomorrow. Recommended reading for investors: The Psychology of Money by Morgan Housel, your Amazon affiliate link, The Little Book of Common Sense,